Hello. I guess we're live, and this is Steve Williams from Pasinex Resources. And first of all, welcome to everybody that's here. I appreciate you coming along, and hopefully we can answer some of your questions today. So yeah, thanks for coming. On the line, aside from myself, is Wendy Kaufman, our CFO, and Evan White, who's our IR person, IR manager. And we went out to everybody as before in webinars, and we asked for questions, and we've absolutely been overwhelmed by questions. So we're going to try and save as much time in the 1 hour for questions. So I've got a little bit of a presentation up front, which I'll take you through, and then I'll hand it over to Wendy. And Wendy will take you through the Q3 financial results from Pasinex, and then we'll go straight away to questions. We're going to, as I said, we've got a lot of questions, so we're going to sort of jump around on the questions to give different authors an opportunity to get their questions aired. So if one of your questions doesn't get answered, I apologize. It's just a time constraint, but I think by answering the sort of mix of questions that we received, we will probably answer most of the questions you have anyhow. Just a few opening comments from me. This has been a challenging year for us, and obviously particularly relating to issues that we've had and challenges we've had with our partner in Turkey, Akmetel. And I think as we go through the questions, we'll sort of talk about that. One of the things we tried to do in our Q3 financials, we've been doing it before, but we made an extra effort in Q3, both in the financial reports and in the MD&A, to try and step through the issues that we have, or the issue we have with our partner, and to try and step through what we're doing about it, and the ramifications of it. So I would encourage you, if you haven't had a chance, to have a look at what we wrote in the financial results and the MD&A, because I think we've tried to step it through with the shareholders and the investors. Despite the problems, as I look at where we're at, I still think things are positive going forward for Pasinex. I believe that we can work through the issues that we have with Akmetel, and we'll talk a bit about that. It's going to take time. They do owe a significant amount of money to the operating company in Turkey, so that's going to take time. It's not one day to the next that will get resolved, but I do believe that as long as we focus on our business, we can get this resolved in the course of time. And then, what's very important with any company like ourselves is the future, and that's all about exploration. And I think both in Turkey and with our new project now in Nevada, I think we have some great exploration upside, and I hope in due course we'll be able to show that. So yeah, when I look at that going forward, we have operations in Turkey, and we have equally and arguably more importantly, we have exploration in Turkey and Nevada. Okay, Evan, so can you click the buttons on the slides now? Okay, disclaimer, yeah. So as I think most of you know, we're in Turkey and we're in the United States. We went to Turkey in 2012. The Panagazu operation we acquired in 2013. We had our first strike of zinc from drilling in 2014, and by 2015 we were mining in Panagazu. We've gone from there. Particularly 2017 and again this year have been strong financial performance from the mine in Turkey. Exploration is not easy in Turkey, and I'll take you through that. It's the nature of this type of geology where the mineralization is the word I'm using now is poddy. So you'll have, a couple of 100,000 tons here, and maybe over there 100,000 tons, and maybe over there 300,000 tons. Oh, and there's 20,000 tons over there. It's the nature of this type of mineralization. And I've got a little slide coming up, which we'll have a look at, where I can perhaps help you to understand what it is when I'm talking about poddy. And then a year ago, of course, we acquired the property, earn-in option agreement on the property in Nevada. We drilled over the summer. We got some exciting results. We believe they're exciting results from our drilling over the summer, and we're keen to get back and be drilling. We have to wait for winter to go. We have to wait for the snow to go and the mud to go. But once the snow and the mud have gone, we hope to be back maybe May next year with a more extensive drill program in Nevada. Evan, next slide. There's not much to say there. I think I've already said that, so we'll move past that slide, Evan, please. Just a little bit about capital structure. 144 shares issued and outstanding. Share price is going down, but then again, so is everybody's share price right at the moment. So our market capitalization has diminished significantly. I'll talk a little bit more about that in one of the questions. Still tightly held. Our directors and management and friends and family of directors and management actually control about 65% of the stock. So, there's probably a true free float of about 35% of the stock. I like to think that hopefully we've gone as low on the share price as we're going to go. Next year, I think, can be a lot more positive, particularly in terms of exploration. And so I'm hoping that we don't see these numbers that low going forward. Evan, next slide. Pasinex, the mine, continues to be producing. I won't go into the numbers because I think some of that Wendy will touch when she goes through the financial performance. But really, I guess the big thing is, it's a direct shipping ore. We're mining and selling 32% zinc as an oxide and around 42 to 45% zinc as a sulfide. It's extremely high grade, and what we there call a natural concentrate. We mine it and we crush it and we sell it. It is that attribute of that direct shipping ore that makes it profitable. We have a bit under 300 employees working there. We have all the usual challenges of an underground mine, and despite that, we're putting off very high margins, and that's all because of the grade. So we're blessed with having such a high grade deposit as Pasinex. And as I go forward and look at some of the exploration opportunity, and we'll talk a bit more about them going in a minute. The one other thing I would say is the tonnage is going to be a challenge. As I said, it's going to be poddy. We're going to have a few 100,000 tons here, maybe 100,000 tons over there, and etc. But so tonnage is always going to be a challenge for us. But one thing that I remain confident of is that there will be very good grade there in the mountains, and we'll be able to continue to look at good high grade production coming forward. Okay, Evan, next slide. Okay, just a little bit about exploration, Spur. Just quickly where it is. It's in gold country in Nevada. It's south of Elko. Elko is very much the center of gold mining in Nevada. In northeastern Nevada, we're about an hour and a half south of Elko. We're about 10 kilometers across the valley to Kinross's Bald Mountain gold mine. And we drilled, as you know, in the summer. We went in thinking it was the same type of geology as we have in Turkey, what's called a carbonate replacement style geology. And our first hole indeed gave us results very much along those lines. we got 44 meters of 14% zinc, including 14 meters of 26% zinc. And that's very similar to, what we're seeing in Turkey. However, our fourth hole hit black shale-hosted sulfides. And it was those black shale-hosted sulfides that were a big surprise and very non-characteristic of the type of geology that we have in Turkey. That's what's called a shale-hosted massive sulfide type mineralization, and or more commonly called a Sedex style. And some of the biggest zinc deposits out there in the world are this Sedex style of zinc mineralization, which is why it's got us excited. One of the things we don't understand right at the moment, and it's only in due course as we do more exploration, is why we have over here a characteristic that looks like carbonate replacement, like the geology we have in Turkey, and over here we have this Sedex style shale-hosted massive sulfide. We're not sure whether they're different events that have caused zinc to go in at different times, or there's something else going on. That's as I said, with due course and a lot more drilling, hopefully we'll understand the sort of genesis of what has happened here. One other thing quickly to say about Nevada is, it's known for gold right at the moment. But if you go back, originally Nevada was called the Silver State, if you go back to the 1800s and the turn of the century, 1900s. And that's, silver is in that case associated with lead zinc. And so there's been a known history of lead zinc silver in Nevada. It's got overshadowed in recent times by gold. But, the more I look at it, the more I think that Nevada, or not just Nevada, southwestern USA, there's quite a lot of opportunity for lead zinc silver. And I think, hopefully we're looking at one of them. Next slide, please, Evan. Okay. Now I've taken you to Turkey and to look at the geology of Turkey. What you're looking at there in those multiple colors of blues and greens is 2 kilometers heading due north from the Pasinex mine. Right down in the bottom left-hand corner of that picture, the sort of brown, blacky blob down on the left-hand corner of that picture of that map, that's the Pasinex mine. There's 2 things about what puts the zinc into the mountains here. The first thing is that it's controlled by the structure. We're on, I think I've said to you before, we're on the boundary of some plates, plate tectonics. So we're on the boundary of the Arabian plate and the Anatolian plate. So it's highly faulted. And it's those faults that basically provide the plumbing system for the fluids that bring the zinc into the mountains. The strike of the faults, you can see very clearly on that map you're looking at there. If you look at the blues and the yellows, they're all trending north-south, slightly northeast-southwest. That's the trend of the overall fault that you're looking at. And it's where you get the intersections of those north-south and east-west faults that you get the zinc mineralization. The next thing to know about the mineralization is that it's hot hydrothermal solutions that bring these zinc into the rock. We believe the temperature of the solutions is around 320 degrees C, hot saline solutions. Aside from carrying zinc, the other thing that these solutions do is alter the limestone. When they hit the limestone, they alter it. And the rock that you end up with is, we call it marble. You end up with a very white-looking limestone. We call it marble. It looks like marble. So the critical thing for us to map is the marble. It's the structures, the faults, and the marble. And so if you look at this map, the dark blue, sort of dark blue purple, is marble. This reflects actually some work we've been doing this year. We've been doing some very detailed mapping. And you're looking, as I said, at 2 kilometres heading north from Panagazu into the Akea property. That's what you're looking at here. And you can see very quickly that within the 2 kilometres, there's a lot of marble. And that then provides the targets that we need to drill on. And indeed, the drilling that's going on right at the moment in Panagazu is going after a few of these marble targets. That's what we drill on. And unfortunately, all the zinc is in the marble, but not all the marble has zinc. So even though we know that we need to drill on the marble, it doesn't mean we're going to hit zinc. We just have to keep drilling on the marble until we hit it. But that's where we're drilling right at the moment. We're drilling on a couple of those areas, a couple of those dark blue areas. Hopefully at a certain point we'll hit the zinc. The next thing to say is you're looking at 2 kilometres here, due north, and there's a lot of marble. The main fault runs for well over 100 kilometres. And our Akea property goes north on strike for another 10 kilometres further north from here. So I think we're just beginning in terms of opportunity. I think that there's a lot more potential area where we can have very prospective ground for looking for zinc. I'll nearly finish on this slide. The last point I wanted to make about this slide is you can see my little point about Poddy. Where the Panagazu mine is sitting, you can see some marble right there. That's the marble that contains the zinc that we call Panagazu. And then if you go up to Akea, even though we're only a kilometre away, you can see there's breaks, there's discontinuity, and then there's more pods of marble. And if they had zinc, there would be more pods of zinc. And that reflects the faults, and it breaks up where the zinc or where the fluids ran and where the zinc will be. Our view of the future is, I've already said it, that we think there's a lot more zinc to be found, but we think that resource is always going to be very constrained. We won't have a big resource in front of us. We may have 1 year or 2 year or 3 year. And we may end up opening up a little mine here, and up there we'll open up another little mine, and over there we'll open up a little mine, a little adit. But that will be the nature of what we're going after. The one thing I do think will be our reality is that we'll continue to have high grade. Wherever we find the zinc, I think it'll continue to be high grade. Anyhow, that's enough of that. Next slide, Evan. Okay, so now we're into the financial results. I'm going to hand it over to Wendy and let her take you through the financial results. Wendy?
All right, thank you, Steve. So this slide here shows that Pasinex recorded a loss in the quarter of $195,000. This compares to income in the third quarter of 2017 of $1.8 million. Excuse me. Pasinex earnings include the equity gain from Horzum, as well as G&A costs and exploration. The equity gains decreased substantially in the third quarter in comparison to last year, and I'll speak about that on the next slide. To the end of September, and Steve spoke a lot about the drilling program at Spur, but for the year we spent just over $600,000 in costs and related to that first drill program, $300,000 of which was expensed in the third quarter. So we've concluded the program and we've released our results. And because of the positive results, we funded the first installment under the Spur option agreement. So in September, we paid US $200,000 of cash and we issued 2.2 million Pasinex common shares. And most of the Spur program, as well as the option payment, was funded through the receipt of loans from certain shareholders, and these will be repaid as we receive further dividends from Horzum. In the third quarter, though, we didn't receive any dividends from Horzum, but subsequent to September, we received almost $800,000, and these monies were used to reduce the Pasinex vendor payables, of which we had about $900,000 at the end of September. And I think that helps address one of our investor questions. And so as as the quarter goes on and into next year, as shipments are made from Horzum, we'll allocate the sales proceeds between Horzum AS obligations as well as drawing down the dividend that's owing to Pasinex. In addition, Horzum liabilities, we do still expect to be reduced through proceeds that we receive from Acmetel. So they do have this receivable owing to us, and we do anticipate receipt of that receivable over the coming year, perhaps further. And again, I'll get into that a little bit on the next slide. Speaking of which, the next slide, Evan, please. So our equity earnings from Horzum, as we know, it includes 50% of Horzum's net income. And so this slide basically shows some of the key components of the Horzum net income. And so when we have a decrease in our equity earnings, we are obviously going to then see a decrease in our net income from Horzum. There's three major reasons in the third quarter that have impacted our financial results. So this includes zinc prices, foreign exchange fluctuations from the devaluation of the Turkish lira, and the valuation of the receivables owing to us from Acmetel, our JV partner. So if I start with zinc prices, the average price for zinc in 2018 has been decreasing. And in the third quarter, we saw a decrease where the average for the quarter was $1.15 US per pound. And this compares to the opposite in 2017, where the price was increasing. And in the third quarter of 2017, the price averaged US $1.34 per pound. So when we see the lower revenues in Horzum, it's really a result of the zinc sales in the quarter being priced lower. But as well, we see some negative pricing adjustments recorded in the third quarter. So in the third quarter of 2018, we recorded $2.7 million of negative pricing adjustments. And this related to sales that we recorded from Q1 and Q2. And then we compare this as well to the third quarter of 2017. And again, it's the opposite. So in the third quarter of 2017, we recorded $650,000 in positive pricing adjustments, which were in relation to sales from the first half of 2017 sales. The second factor, the Turkish lira, it had its most significant devaluation in the third quarter of 2018. And because the Horzum financial statements are initially recorded in Turkish lira, a situation of a devaluation has impacts on the Horzum financial statements. We do see a benefit from sales being recognized at a higher Turkish lira price. The U.S. sales translated to Turkish lira result from higher Turkish lira sales. And in addition, there's adjustments on the U.S. dollar receivables. So again, the Horzum financial statements are initially recorded in Turkish lira. So when we have a U.S. dollar receivable, any fluctuations in the Turkish lira get reflected in the income statement. And so with the devaluation of the TL in the third quarter, we see a substantial gain on the U.S. dollar receivables owing to Horzum. So the gain is reflected in Turkish lira, and then we translate that gain into Canadian dollars to determine our equity earnings. So this is the $6.5 million foreign exchange gain. It's not shown on this slide, but it's recorded in the net income. So $6.5 million foreign exchange gain recorded in the third quarter. And we're going to see this foreign exchange gain move up, move down, in tandem with the changes in the TL US dollar exchange rate. And I think this too is, it was one of the investor questions, and I hope maybe that explains to that investor and anyone else on the telephone too, because I realize it can get a little bit confusing with the changes with the TL statements and then the conversion into Canadian dollars. Finally, on the receivable valuation. So in the past, our sales from Horzum, so the sales of the zinc material were sold through a subsidiary of Acmetel. And again, Acmetel being our JV partner. Payment of the trade receivables have been slow, and in the third quarter, we didn't receive any payments. So as a result, we needed to, from an accounting perspective, we need to assess the creditworthiness of this $23 million receivable. So although the company, we do expect full recoverability of the receivable, But at this point in time, we think it will probably take longer than initially anticipated. So Horzum then recorded a finance expense of $7.5 million in the third quarter. And what that basically represents is a loss in the value from the time value of money. So because of the receipt of funds coming in over a longer period of time, we apply a discount rate and come up with a reduced value. In the fourth quarter, we have successfully issued invoices directly from Horzum AS, and the cash has come directly to Horzum, where we've jointly controlled and allocated the cash disbursements. So those are the key highlights that I wanted to stress on this call, so we can leave room for more questions. So, Steve, I think I'll just turn that back to you.
Okay, thanks, Wendy. Okay, so what we'll do is we'll go to the questions. Just give me a second here to call up the questions. There we go. As I said, I'm sort of going to jump around on some of these questions just so that different authors can have their questions answered. And we'll go as far as we can get. Okay, so the first question I'm going to answer is this one. Okay, Acmetel remains in an uncertain position because of lack of sufficient cash flow. What opportunities they have to improve cash flow? Okay, so that's a question about Acmetel. And I'm constrained in what I can say because Acmetel are a private company. Except that what I would comment is that yes, they have definite cash flow issues at the moment. However, they are an asset-rich company. They have several businesses aside from mining. They have a carpet business. They have a farm business, and they have real estate. They have a lot of real estate in Istanbul and elsewhere in Turkey. And so I can't say any more, but I do think that they have options in terms of what they can do to get liquidity into their company and work their way through the problems. Not much more I can say because they're a private company, so that's really as much as I can go to. Next question. Please describe the atmosphere between the joint venture partners. I guess it suffered. What's your opinion? Okay. Yeah, I mean, this has been a difficult year between us and our partners. And, ultimately it sort of led to us needing to take back the process of the sales and get very actively involved in the management of the cash. So yeah, there have been some challenges and some tensions in the joint venture partner, and yeah, I mean, obviously there's some divergence of opinion. But one of the things I would say is that we continue to work together as partners. Definitely with some tension, but we continue to work together as partners because I think there are other options, but I think we all recognise that in the interest of everybody, we have to keep together and we have to keep the ship going forward, and that's the way through. And so, despite the tensions and some challenges, that's where we're going. Okay, I'm going to jump down to another question now. Question 17. Okay. Oh, this is a completely different matter and a different author. Yeah, this relates to a news release we just put out the other day. There's been an issue identified by the BC Securities Commission involving disclosure of the 43-101 we put out on Panagazu, the report not being fully compliant. What are the issues and what are we doing about it? The issue didn't relate at all to the resource that we declared in the 43-101. The issue related to their view that what Panagazu was an advanced project. We argue that it wasn't an advanced project. It was actually a producing mine with real numbers. But they said that it is an advanced project, and as such, as soon as it's an advanced project, as soon as you define a project as an advanced project, you are obligated to report in a 43-101 not just resource, but other things being mine planning, metallurgy, environmental studies, capital and operating costs, economic analysis, the sort of things that you would expect if you were having a project going through a pre-feasibility and feasibility. And, you know, there's sections in the 43-101 to address those matters. And so they said we must report on those matters. As I said, we argued that that's not the case because it's a producing mine and there's transparency on all those numbers, but they said they wanted. So we are working on that. We will be updating that 43-101. We won't make any change to the resource because we're not changing the date of the 43-101. It'll be the same date that it was on the report that's there. All we'll be doing is adding these chapters on your mine planning and environmental studies and things like that. And so that will be being done, and you know, hopefully that will address the concerns of the BC Securities Commission. Next question. In 2018, have you been able to succeed expanding, replacing resources and finding new mineralization in Panaga and Archaea? We are drilling, as I said, at the moment. We've been mostly recently drilling in Archaea, but before that we were drilling in Panagazu. There's not much more I can say except that you know, we need to continue the drilling. One of the things I was trying to say a bit earlier when I was talking about the you know, taking you through the geology was to, you know, indicate the sort of complexities of searching for this zinc mineralization. And really, I mean, one thing I didn't say, but one of the realities is it's drill intensive. We have to do a lot of drilling, and we have a lot of holes that don't hit. You know, one of the things I reflected on as we're going into Archaea and thinking back on Panagazu, I think it was hole number 16 from our surface drilling that finally hit the mineralization in Panagazu that we've been mining. So anyhow, all I can say in answer to this question is that it's an ongoing task, and at the right time we will update the market, obviously, on what's going on. But you know, we need to continue to drill. It's going to be a lifetime challenge, actually, that we have to continue to extensively drill on the targets in those mountains. Okay, I'm going to go down to a question down here. Problems, have there been problems since the last receivable being taken by Aquatel causing it to go up? Has this happened again? So certainly in Q3, the receivable went up, and there were definitely issues relating to Aquatel. But as of, I think Wendy just made reference to it, as of Q4 coming into October, we've got into managing the sales. We're now selling. We're not selling through Aquatel's trading company anymore. We're selling direct as Horsam AS, the operating company, and also we're managing the cash flow. So I think that we haven't got things smoothed yet. We're getting close to getting it smoothed. So some of the sort of issues that we saw earlier in the year are being managed now. They're not, as I said, they're not in full control because there are, you know, Wendy made reference to the fact there's, for example, issues relating to final adjustments on sales in Q3 we were finally adjusting sales that were made back in Q1 and Q2. So there are some residual issues like that, but we are, managing that whole sales process right now. Next question. Okay, 50-50 partnership. If they came along, what if they decided not to cooperate and stall the company if they don't get more money? I've had this question before. People say, well, what happens in a 50-50 partnership if you disagree? And there are clauses in our shareholder agreement that cover scenarios to tie break, if you like, or tie break's not the right word, but to get away from a blockage as a result of two parties disagreeing. There are clauses. The simple fact is that both in a 50-50 partnership, both parties are in there. Both parties have their desires, where they want to go on a particular issue. But the only way through is to work out a common solution, to come to some sort of agreement between the parties. And definitely there are challenges. Sometimes you do see things differently, but either then one of the parties has to back away from that and say, okay, maybe it's not so critical right at the moment, or alternately, we have to find that compromise. And that's what we've been doing. Some issues are harder than other issues, but we do strive and continue to strive to get some mutual resolution, some compromise. And I think that's the answer to that question. Okay, next question. What are we planning to do? I'm paraphrasing this question because I haven't got it in front of me. What are we planning to do in 2019 with regard to exploration, Panagazu, Spur, and Akia? And what sort of expenditures might we be looking at? In terms of Panagazu and Akia, it's very simple. I've already been saying it. I think that's a lifetime commitment. We have to continue to drill. Resource is always going to be a challenge, because of this potty nature of the mineralization. So we're going to have to be constantly drilling. So, as I look going into 2019, we will have a program with 2 or 3 drills running all year, I would expect. We haven't made those final decisions, but based on what I know, I would expect we would have a drilling running all year, 2 or 3 drills running in Panagazu and Akia. I would also expect that we would continue to fund that drilling from operations. That's what we've been doing up to this point. Both exploration and mine development have been treated as operating costs. When we report financial results, that's after paying for exploration and mine development. And I would think that we would continue to apply that same philosophy going into next year. As I said, again, we haven't made those final decisions yet. We haven't finalized 2019 budgets for the operating company. We're working on it right at the moment, but that's what I would expect. Spur, however, is different. Spur is the project in Nevada, it's different. This year, I think Wendy made reference to it now, we did a drill program which we funded out of some cash flows from Turkey and out of some shareholder loans, was how we paid for Spur exploration this year. We had some very encouraging results, and Spur's at that point where we need to kick it up. We did about 2,000 meters of drilling in Spur this year. Next year, we need to be thinking of 10 to 15,000 meters. Probably not diamond. I think that it almost certainly will be reverse circulation drilling, because diamond drilling is very expensive in Nevada. So because of costs, we'll do reverse circulation drilling. but a significantly bigger program, because that's the way you go after that opportunity. Again, we haven't finalized those plans, but that's sort of what we're thinking of. We're pulling together detailed plans at the moment. I would expect that, probably in first quarter 2019, we'd like to be drilling in second quarter 2019, so probably in first quarter 2019, we'll be able to tell the market what we're planning, what we'd like to do, and how much money and how much funding we're going to need if we're going to do, what exactly we're going to do for Spur. But as I look at that, that's the sort of opportunity that does need a significant drill program to go after. Okay, so next question. Okay, I'll go right up the top here. Share price is still under pressure. Cash flow declined because of various issues. Downtrend of share price because of low confidence. What are the next steps to recover trust from shareholders? Yes, the share price is under pressure. And yes, obviously I think, the issues particularly relating to our partner have put pressure onto our share price. It's not the only thing. I think that's probably the major thing. But, obviously also we're in a declining zinc price, which Wendy made reference to. And also just overall the market for junior exploration companies, mining and exploration companies, is not good right at the moment. But, back on the first issue, which is the issues with our partner, I think the answer is quite simple, and it's to do what we're already doing. We've taken control of the sales. We're managing the cash. We've still got ways to go here, but that's what we're doing. We're talking about it. I made reference to the fact that we made a bigger effort to put more information into the financial reports in Q3 that we'd been talking about before, but we stepped it up in terms of some of the things we put into Q3. We're continuing with things like webinars. We'll continue with periodic information, news releases, and other things to tell people, when there are significant advancements. And I think that that's what we're going to do. We're going to, show to the market that we're going to manage this situation through, and we're going to come out the other side. It's, as I said, it's still quite a process, quite some time. But I think, hopefully as we continue to do that, we'll show to the market that things are going the right way, and we'll restore some of that shareholder confidence. The other thing I could quickly comment on is the zinc price. The zinc price is sitting around $1.20 to $1.25 US per pound at the moment. I'm thinking next year is in the range probably of $1.10 to $1.20 US per pound, so a little bit lower than where we are at the moment, but still strong. And at those metal prices, I expect that Penagazoo will continue to be profitable. So I think we can continue to show, hopefully, to the market that okay, the metal price is down a little bit, but we continue to have profitable operations. So again, I think with the passing of time and quarter by quarter financial results, we can continue to show the market what we're doing, and hopefully that restores confidence by the shareholders. Okay, next question. Exploration takes a lot of money. How does Pasinex intend to meet obligations in relation to the Spur Zinc project? So this relates to the question I answered a bit before. I can't categorically declare that right at the moment. You're quite right. Exploration does need a lot of money, and you're quite right that we would like to do a significant program in Q2 next year. We will put our plans together, and we'll put this out to the market, I would expect in Q1. And so I just ask for your patience just to let us get that sort of information out to the market. Question 5. Okay, when does Pasinex expect to release some exploration results to the market? And I guess this particularly relates to Akea and the drilling that's going on in Akea. Yeah, we will be updating. We need to, there's a couple of things to say here. We need to get enough drills results together to be able to, put a block of information to the market. So we'll, there's a certain threshold of drilling that we need to do before we report, but we're getting there. And the next thing is that, I've already made reference to this. This sort of exploration is drill intensive, and so we have to do a lot of drilling to get the sort of results that we're expecting. So, people need to understand that it takes a bit of time. We have to put in, it's drill intensive, we have to put a lot of drill holes in. But I would hope that certainly in Q1 next year we would have some results coming out to the market on Akea drilling. Next question. Spur as an early stage zinc project shows good potential. Is it a joint venture strategy which Pasinex is looking at for this project? There's many options that we could consider with Spur. I think at this stage our preference is to at least get into the next drill program, the one that I'm making reference to in Q2 and next year, and hopefully we have some success in that drilling program, and that will strengthen us and hopefully strengthen our share price, and then then we can go from there. Nothing is ever off the table. There's always options that one considers, but our preference would be to try and get through and do this drill program as Pasinex in Q2, but step by step. Okay, and I'm going to. There's a lot of questions here, so you'll have to bear with me, and maybe I'm being a bit brief in some of these questions. In the MD&A, you mentioned several ways to reduce the receivable. Akmetel selling assets from other subsidiaries, transferring other valuable mining assets to Hosemayesh, future dividends, and sale of a share. Sell us a share in Hosemayesh. Can you please give more details of all of these four different possibilities, including probabilities, and give your thoughts on how to enforce every possibility? Okay, that's a good question. I think when we put this down, this is a list, and wasn't meaning to imply any particular possibility or probability in any particular priority in terms of that list. I think the first one that I would comment on is dividend from Hosemayesh being redirected as repayment of the receivable. That's sort of plan A. We haven't finished 2018 yet, but we're expecting that this can be a profitable year, 2018. That would be our expectation for Hosemayesh, and we would expect that we would be considering the same sort of thing as we did in 2017's profitability, which was we declared a dividend from 2017's profitability. Some of half went to Akmetel, half went to Pasinex. And in the case of Akmetel's half of that dividend, their dividend profit from 2017 just came off the receivable, came off the balance sheet. There was no cash paid. It came off the balance sheet. So, again, as I said, we haven't finalized 2018, but I'm thinking that would be, hopefully a scenario that we could be looking at 2018's profit. So that would be something that we would be hopefully at. The others are a bit more intangible, either transferring valuable mining assets or sale of some of their assets, shares in Port Horsemayesh. We have had preliminary conversations along those lines, but that's all they are, is preliminary conversations. It's hard for me to comment on it. I mean, you know, Akmatel has to make their own decisions about, you know, the issues they face and, you know, how they address those issues they face. And to some extent, we need to, the ball's in their court, and we need to see how they address some of these issues. As I said, we have been having conversations along these paths, but that's all they are, is conversations at this stage. Okay, I'm going to go to the next question. 14. Okay, there's a lot of questions here. Okay, this is from the same author. I know who the author is, and if Dennis is out there, hello, Dennis. Difficult ground conditions in 2018 and mineralization accessibility issues. How are you going to resolve this issue? Okay. And then we're talking about, on the slide, there's a new adit project going for 550 level. What kind of mineralization do you expect there? Okay, so I need to take you back to the comment that this is pods. I called the word I said is poddy. And indeed, if you look at some of the pictures, the computer pictures that we've put out about Panagazu, you can see the poddiness. As we come towards later in Panagazu's life, so some of the easy mining is gone. Not all of it, but some of it is gone. We've already taken some of the easier stuff, because that's what you tend to do first. You tend to take some of the easy stuff first. As we push into 2019, yeah, there's less of the easy material and more of the difficult material going into next year. And so that's going to be our reality going into next year, and it's a reality that you know, some of this poddy stuff is being already mined out. We have identified, going to the 550 level question here, we have identified a deeper mineralization at, indeed, going down from about 630 level down to about 540 level, something of that sort of number. So it's down deeper. We were originally going to drive in another adit to get down to this deeper material. We're now not doing that. We're actually putting in a ramp from our 650 level. We're ramping down 100 meters to get access to some of this deeper mineralization which we've identified. That mine development is ongoing. It started about 3 months ago. And it's ongoing. It's quite a big mine development. It's going to take us about 9 months to complete. So it'll be Q3 before it's completed, Q3 2019 before it's completed. But we're doing that development as we talk, and we're doing that development to open up these deeper mineralization. This deeper mineralization, we believe, will be sulfides, not oxides. You know, based on the drilling that we've done into that area, we believe it's sulfides. Obviously, you know, we need to see once we get down there, but that's what we're expecting. You know, if it is sulfides, it will be potentially quite valuable material because the sulfides tend to be higher grade and they're paid better commercially than the oxide material. But, you know, again, I can't, you know, black and white confirm that because we're not there yet. So what my comments are based on very much on some of the drilling we've done. So, you know, next year we'll be continuing to mine some of the remainder or oxide ore, and then doing this development, getting down to the 550 level to open up what we think will be deeper sulfides. So that will be the scenario of what we're looking at next year. We're putting our budgets together and finalising our mine plans for next year right at the moment, and we will be making more clear statements to the market about what we'll be doing next year, sometime in the next between now and January. The other thing to say here is, and it comes back to the point I made, that the drilling in Archaea and beyond is really important, because as we go beyond 2019, we're going to need to find some new mineralization, and so the drilling that's going on in Archaea and some of those areas, those target areas that I indicated a bit earlier, that is critical drilling. Okay, I'm nearly running out of time here, so I'm gonna. Okay, question 16 is easy. What is your production guidance for 2019? That information will be coming out sometime in the next 6 weeks. We'll be giving you our production guidance for 2019. Okay, I'm going to go to question 18 down here. I'm going to do about 2 more questions. I'm sorry, I'm going to miss some questions here. We're just running out of time, but hopefully between the mix of questions that we're picking up, I think you're all getting some update that you're looking for. So question 18 here, how comfortable are you with the life of resource given the 43-101 timing? So that relates to what I was just saying. I think going into next year, we're starting to deplete that resource in Panagazu. We'll be putting out our 2019 plans, but the resource is starting to diminish, and some of the issues that we face are because some of the easy material has been mined. But again, going back to my first comment, I still think there's a lot more zinc to be found, and I think it's just a question of time and drilling that will indicate where the next tonnage is going to rely. Okay. This question I've almost answered already. Archaea, when are we going to get results? We will have some results hopefully coming out in January for the market. 20. What's in place to stop Akmetal from selling the ore? Okay. The single biggest change we made is that we're selling the product at the moment through the joint venture operating company, Horsemesh. So we have stopped selling it through the Akmetal trading company. And by selling it through the joint venture company, we Pasinex have to agree to sales contracts. We have to agree to details of sales. We have to agree with invoicing. So that's sort of happening right at the moment. So I think those controls that are needed are in place now. Okay, I'm going to finish with one last question here. 7. Okay, this is a good question to finish with. Time takes money, certainly does. Pasinex was able to bring Panagazu very fast to production. What timeline seems to be realistic to generate cash flows from Archaea? Yeah, this is a very relevant question because it goes back to the same thing that I've been talking about, which is that you have what I would expect is these potential pods of mineralization in the mountain. Some will be close and some will be a bit further away, and some of it will require opening up new adits and new mine development. We've talked about some of the challenges we've had with our partners, but one of the things that I would say about Turkish partners in general and mining partners is that they are very good miners. And the team we've got at the moment in Panagazu, led by the mine manager called Levent Chil, is a very strong team. Once we can see our way through and, okay, we can see a pot of ore over there that we think we can get, and we do have to go through permitting processes, but again, I would think that that we can, reasonably expect that we'll get permits approved in a reasonable time. Once we've done that, I think we have a very capable team that can go in and do mine development, can open up new adits, and can do the sort of mine development that we need to open up new opportunity. Time is money, and we are going to need to be responding like this. That will be part of the future. But I genuinely believe that we have a very competent, strong team, and you only have to look at what they've done already to recognise, their capability. I made reference to the fact that we're doing a big underground development right at the moment to open up some of these deeper sulfides, or what we think are deeper sulfides. That's our internal team doing that. It's a significant development program, but it's our internal team doing it. So I think the critical thing to me here is and I'm repeating myself, is the exploration, and it's the drilling, and we just have to keep going with that. But then once we've identified targets, I think we have a mine team that can deliver on it. I think that's all we've got time for, Evan. Hello, Evan?
Excellent. So I'll say goodbye to everyone and hope you have a wonderful holiday.
Yeah, thanks everybody for tuning in.